Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about AMGEN INC quarterly report. AMGEN Inc. offers a diverse range of businesses and services that cater to the healthcare industry. The company's principal products include therapeutic treatments for various diseases such as rheumatoid arthritis, plaque psoriasis, osteoporosis, multiple myeloma, and colorectal cancer medications for anemia, red blood cell disorders, and thyroid eye disease products for preventing skeletal-related events and reducing the risk of cardiovascular diseases in addition to its product offerings. AMGEN Inc. also provides services through distribution channels, including pharmaceutical wholesale distributors and direct-to-consumer sales collaboration agreements with other companies, such as AstraZeneca, Novartis, UCB, Kyowa Kirin, and BeiGene. For the development and commercialization of new products, the company serves a wide range of healthcare providers, including physicians, clinics, dialysis centers, hospitals, and pharmacies. The AMGEN Inc. stock price has remained relatively stable over the past year, experiencing only minor fluctuations. Despite several significant news events affecting the company's financial performance and product development, none of these events caused a notable change in the stock price, defined as less than 0.22%. The overall decline in stock price was 6.41% from $316.60 to $296.32 over the year. Several factors may have contributed to this stability. AMGEN's third-quarter earnings report showed a 12% increase in total revenues, which led to a 6% gain in after-hours trading. However, rising costs for its obesity drug, MariTide, overshadowed these positive results. Additionally, the company's strong financial performance in Q2 2025 was met with minor decline in after-hours trading. The lack of significant stock price changes may also be attributed to the fact that many news events were reported during a period when the market was relatively stable. The absence of major economic or industry-wide disruptions may have contributed to AMGEN's steady stock performance. The primary drivers of revenue growth or decline in the company's financial performance can be summarized as follows. Revenue growth is primarily driven by the success of several key products, including Prolia, plus 18%, Repatha, plus 40%, EVNITY, plus 45%, and XGEVA, plus 46%. Additionally, UPLIZNA experienced a significant 97% growth in the U.S. market. These products have contributed to the overall revenue growth. On the other hand, revenue decline is primarily driven by the decline of ENBREL, minus 30%, and Oatsla, minus 12%. EVNITY also experienced a minus 38% decline. Furthermore, several products such as BLINCYTO, Nplate, KYPROLIS, Aranesp, and AMGVITA have seen significant declines in revenue. The company's financial performance is also influenced by other factors, including a decrease in cost of sales and an increase in research and development expense. Net income and profit margins have experienced significant changes over the past year. Net income has seen a substantial increase, with a 14% rise in the 3 months ended September 30, 2025, and an impressive 84% jump for the 9 months ended September 30, 2025, compared to the same periods in 2024. Profit margins have also shown notable growth, with operating income as a percentage of total revenues rising by 23% and 29%, respectively, over the 3 and 9-month periods. These changes can be attributed to several factors, including an increase in gross amounts of UTBs due to tax positions taken during the current year, ongoing tax disputes with the IRS and other tax examinations, and continued investment in business, debt reduction, and return of capital to stockholders through dividends and stock repurchases. The company's financial performance indicates a steady increase in its ability to generate positive operating cash flow. In 2025, the net cash provided by operating activities reached $8,355 million, marking a significant improvement from the previous year's $6,719 million. This upward trend suggests that the company is effectively managing its operations and generating sufficient cash to support its growth. The company's debt level and interest expenses have undergone significant changes over the past year. Initially, there was a decrease in debt from $56.549 billion in December 2024 to $52.434 billion in September 2025. However, this trend is contradicted by another report showing an increase of $600 million, 2.6%, in debt from $23.511 billion in December 2024 to $24.111 billion in September 2025. Regarding interest expenses, there was a notable decrease of 9% from $776 million in 2024 to $685 million in 2025 for the 3-month period. For the 9-month period, the company's interest expenses decreased from $2.408 billion in 2024 to $2.102 billion in 2025, indicating a reduction in interest expenses over time. The financial performance of various segments and regions has been mixed, with some areas showing significant growth while others experienced decline. Segments that performed well include product sales overall, which saw a 12% increase. Repatha, EVENITY, TZSPIRE, and several other products also showed strong growth, with increases ranging from 28% to 63%. In the U.S., many products such as MVASI, PAVBLU, UPLIZNA, TAVNEOS, and AMUVIG saw significant growth. On the other hand, some segments performed poorly. ENBREL experienced a decline of 30%, while KYPROLAS dropped by 5%. In the row Rest of World, several products such as Prolia, MVASI, AMGENINC, RAVICTI, and Neulasta saw significant declines. The U.S. market performed relatively well, with many products showing growth. However, the row experienced a decline in some areas, while others showed modest growth. Management's outlook and strategy. The company is focused on growing its human therapeutics segment through investments in later-stage clinical programs. Despite expecting volume growth from certain brands to be partially offset by net selling price declines, management remains confident in the company's future cash flows. To optimize cost of capital, the company will continue to invest in business while reducing debt and returning capital to stockholders through dividends and stock repurchases. Management is also concerned about external factors that may impact sales, such as changing U.S. federal coverage and reimbursement policies, government and commercial payer actions outside the U.S., global economic conditions, and pressure on governments to reduce healthcare spending. However, the company remains committed to advancing its pipeline through investments in clinical programs. Acquisitions and divestitures overview. The company has made notable transactions in the form of acquisitions and divestitures. On one hand, it has made a significant acquisition with B1 Medicines Limited, formerly known as BeiGene Limited. This move is expected to bring in new opportunities for growth and expansion. On the other hand, the company has also engaged in divestitures, including the impairment charges related to Otsla's intangible assets. Additionally, it acquired inventory from Horizon, which involved a fair value step-up of the inventory. These transactions demonstrate the company's strategic efforts to optimize its portfolio and resources. The company has a history of paying dividends to its shareholders. In fact, it has paid out significant amounts in recent years, with $1,308 million in dividends reported on page 8 and an estimated $3.8 billion in 2025, as mentioned on page 51. On the other hand, the company has not engaged in share buybacks, with no shares repurchased under its stock repurchase program during the 9 months ended September 30, 2025. Concerns about inventory buildup and supply chain disruption are present in the company's financial summary. Specifically, there are concerns related to 4 key products: XGEVA, TEPZZA, BLINCYTO, and KRYSTXXA. Additionally, global supply chains are at risk due to tariffs and trade actions, which could lead to distributors, customers, and suppliers becoming insolvent. This disruption may slow or delay the processing and delivery of products and materials in supply chains. That concludes the financial summary for AMGEN INC. Feel free to comment below, and I will be happy to answer them when possible.